Dividend investors, welcome back to Dividend Talk. This weekend it's St. Patrick's Day in Ireland, and today, to honour that, I want to share with you my top 3 Irish dividend growth stocks. And I'm really going to focus on dividend growth. It's not something that I can say is common over here in Ireland, but we do have some really good companies, and I'm going to share with you my top 3. So the first company I want to introduce you to is CRH PLC. And CRH is a leading provider of building material solutions in over 29 countries worldwide. The main positions are in North America, Europe, and also in Australia. The company was formed in the 1970s when 2 Irish companies called Cement Limited and Roadstone joined together and created CRH, which actually stands for Cement Roadstone Holdings. The company is listed on the Dublin Stock Exchange, the London Stock Exchange, and also the New York Stock Exchange, and it reports out all its earnings in US dollars. The company operates in 3 main business segments, with the first one called Americas Materials, and this is the largest segment of the group, which generate roughly 44% of the group sales. You can see that a large part of these sales, 50%, comes from infrastructure, and the company notes that a significant proportion of this comes from public tender. And these projects include federal, provincial, state and local government authority projects. In 2022, this segment actually performed quite well, with sales actually increasing 15%, EBITDA as they have defined it grew 6%, and operating profit which grew 7%. And when you're reading through the annual report, one thing that is quite noticeable is that they were well able to pass on the price of inflation to their customers. And we can see this the whole way through. So if you look at materials, for example, they say that volumes declined by 1%, but actual prices increased by 10%. And something similar then when we look at the cement segment again, sales growth was roughly around 8%, which was driven primarily by price. So it seems these guys have absolutely no problems in passing on the higher costs of inflation onto their customers. The second segment that the company operates in is building products, which is roughly around 24% of the group sales. In this segment, they supply and deliver high quality, value added, innovative products and solutions to help enhance the built environment for modern communities. This includes architectural products, infrastructure products, and construction accessories. Again, in 2022, this segment compared really well based on the previous year, and we can see that revenue actually grew 26%, EBITDA grew 52%, and operating profit grew at 59%. They've also been quite aggressively buying up some companies in this segment, with the biggest one being one of North America's leading providers of fencing and railing solutions called Barrett. And along with this acquisition, they're actually doing quite well, particularly in Europe and Poland, where there is a lot of new buildings happening and a lot of new infrastructure needed, and these guys seem to be providing a lot of the materials for this to happen. And then the last segment that they're in is Europe Materials, which is pretty much the exact same as America, just operated throughout Europe and a little bit of Asia and Australia. This segment accounts for roughly 32% of the group sales and pulled in 10.5 billion in 2022. Now in 2022, this segment didn't do quite as well as the other two, as sales pretty much flatlined. There was a small decrease in EBITDA, and net operating profit was up roughly 1%. And what we are seeing here is that sales is drastically declining as the price of inflation is driving everything up to the roof. There's lots of things contributing to that. The impact of the conflict in Ukraine is one of them, and the cost of raw materials is significantly higher. The company actually has a pretty decent track record when it comes to paying dividends, and it has paid consistent dividends to its shareholders for the past 50 years. And you can see their history as far back as 2009 on their website. One thing to note here is that they do also have dividend cover, and at the moment that stands roughly at around 2.7. That just means their earnings is 2.7 times what they have to pay out in dividends. So if I flip over to Kyfin, I am looking at these in US dollar because they report in US dollars. You can see that their dividend annualized growth rate over the last 10 years is 6.64%. Their 5-year annualized growth rate is 11.81%, and they also offer a dividend yield of around 2.64%. So over the last 5 years, you would have a total return from these guys of around 9.38%, which is not too bad for an Irish company. The second Irish company that I want to talk to you today about is DCC PLC. Now, DCC is a leading Irish international sales and marketing and support services group operating in 3 main sectors, and that is energy, healthcare, and also technology. The energy segment has 3 main divisions within this segment, and that's retail and oil, LPG or gas, and retail waste. So the retail and oil division supplies retail and commercial fuels, lubricants and heating oils, and operates its network of service stations under the brand name of EMO. Now, if you're not in Ireland, that may not make sense to you, but definitely if you're from the Republic of Ireland, you will see these service stations littered throughout the whole country. The LPG division supplies bulk and cylinder LPG to domestic, commercial and industrial customers right across Europe.
Flow glass.
And it operates
So
under
just remember, I'm
names
taking
such
out
as Flowgas
all of
in
the
Ireland,
audio here,
and Benegas
and
maybe if you're
I
in
will
the
just be
Netherlands.
using.
And then the Retail West division operates in France, and it is purely focused on the distribution of heating oils and diesel fuels to residential and commercial customers. And as you can see, they have a nice split between domestic commercial customers and mobility here is just their service stations. Another segment that DCC operate in is technology, and this is pretty much split into 2 main divisions. And the first one focuses pretty much on the supply of enterprise technology products and services, including data center infrastructure, security networking, and cloud solutions. And then the second part then focuses on the distribution and supply of consumer technology products, including audio-visual equipment, gaming products, and home automation solutions. And they just completed one of their biggest purchases yet in 2021, where they bought the company Almo in the United States. So this doubles their size actually of their business in the United States. Now, the technology is a relatively small part of their business. I'm not sure if that's true. Let me check that out. Now, the technology sector is their second biggest sector and brought in roughly 4.6 billion in revenues in 2021, which is just under half the amount that the energy business brings in. And then the last segment that they are involved in is healthcare, which brings in roughly about 765 million in revenue. So it is relatively small compared to their other 2 segments that they have. But the healthcare segment, again, is split into 2 different divisions. The first one is focused on the outsourcing of healthcare services, such as management and operation of healthcare facilities and primary care centres. And then the second division is focused on the distribution of medical devices, diagnostic equipments, and consumables to hospitals. And it operates in a number of brands, including Williams Medical, SEERS Medical, and Huntley Healthcare. I do like that the company has a strong commitment to the dividend, and you can see that they relate that here, where the last increase was up actually 10% up on 2021. This means that they have a record of 28 years of uninterrupted dividend growth. So this really is a European dividend aristocrat. And if you scroll down, you can see over the last 10 years, we can see this nice graph here where they have indeed increased their dividend over the last 10 years in pence. And this is noted on their annual report, but they are saying that the total return in shareholders in terms of growth in share price and also dividends received equates to around 377%, which is not too bad at all. So the last Irish company that has actually pretty good dividend growth is a company called Glanbia. And if you are from Ireland, you will no doubt know about this company. They've got factories littered all throughout the Republic of Ireland and abroad, but you don't have to travel too far to find yourself close to one of their factories. Glanbia actually operate in three main segments, and the first one, which might be a surprise to some people, is the Glanbia Performance and Nutrition. So the performance nutrition brings in roughly 1.6 billion euros, and if you're into fitness or into the gym, you might hear of the whey protein brand called Optimum Nutrition, but they also own brands such as Slim Fast as well, which is quite well known throughout the Republic of Ireland. The second segment then that I alluded to there in the last portion is their nutritional segment, and this is where we see them pretty much cheese. Glanbia are well known for their cheese. They have lots of cheese plants throughout Ireland and also in the United States. So while cheese is their biggest market, they're also involved in other areas as well, such as plant-based solutions, which they offer the likes of flaxseed and chia seed and quinoa and oat ingredients as well. So they have a whole portfolio of food which generate in and around 4 billion euro in revenue. And then the last segment that they have, they call joint ventures, but again, pretty much that is just their cheese plant. But they have different ventures with companies such as Southwest Cheese and MWC in the USA. They also do mozzarella cheese over in the UK, and they have a plant here in Ireland as well where they are doing mozzarella cheese. From a dividend perspective, they currently offer 2.4% dividend yield, which is a little bit on the low side, but you can see that their annualized growth rate over the last 10 years has been 13%, and even had a 10% increase in the last year as well. So they've been a solid dividend payer way back as far as 2003. So there you have it. 3 Irish companies that pay growing and consistent dividends that are worth your attention, and I would encourage you to do your own due diligence on each of these companies if you are interested. I do know that the withholding tax in Ireland might be different for Europeans than it is for me. I think it's a little bit higher. So maybe the dividend yield might need to be a little bit higher to offset that tax. What I do know is that when I'm claiming back tax through the Irish revenue, it is quite a straightforward process. I'm just not quite sure how it is for non-nationals. So please do your own due diligence and consult your tax advisor before making a purchase or getting involved in Irish companies. But again, look, I hope you like this video. If you do, please let me know in the comments below, and also please consider subscribing to this channel. It helps me grow, it helps the channel grow, and it will let me know that you like these types of videos, and I will make more of them in the future. So see you all soon.